Hey everybody, my name is Brendan from thestockstudents.com, and today I want to talk about the 3 stocks that I'm watching this week. Those 3 stocks are BlackBerry Stock, ticker symbol BB, Unity Stock, ticker symbol U, and lastly United States Steel Stock, ticker symbol X. So now let's get started. So here we are in BlackBerry Stock, and we can see our candles are resting here around the $14 support level, which if we look back at my video from last week, this is the level that I mentioned that we should be watching. The reason why I'm watching the stock this week is because I want to see if this $14 support level breaks. BlackBerry could be waving out here around the $14 level for a while, so I think that this still is an okay spot to add shares if I wanted to add shares to BlackBerry. But to me, this spot is a little precarious. If we look back in time here, when we last saw the $14 support level, once we broke that $14 support level here, we went all the way back down to the $10 level. And I think that is a more attractive position where I would want to add shares to BlackBerry. The longer that we hover out around the $14 level here, the more likely that I think people will be concerned that this level will break and we'll head back down to the $10 to $12 level. And this fear is what causes people to be a little skittish. This again to me is an instance of market psychology called the self-fulfilling prophecy. Basically, the psychological concept is that in order to prevent something that you think will happen, you actually do something to make it more likely to happen. For this example here, as BlackBerry stock hovers around this $14 support level, more people are likely to be concerned that the momentum of the stock is gone, and people will be more likely to be concerned that BlackBerry will drop below this $14 support level here. Because of that, people will be likely to sell the stock in order for them to avoid dropping below this $14 level, maybe back down to the $12 or $10. However, by selling the stock, this actually contributes to what you think will happen. By selling the stock, you contribute to the stock price falling. But this market psychology definitely should not be the only thing that may cause this $14 support level to break. We also have some macro news here, mostly around the SEC and Gamestop, where we can see in this article that during the most recent earnings report conference, Gamestop stated that the SEC is investigating the unusual trade activity, which again causes some fear in the markets and could add some downside risk for momentum stocks. But with that said, and as I've said in my previous BlackBerry videos as well, I do like BlackBerry for the long term. With their steps into autonomous driving with XPeng and Amazon, I think this could lead to new avenues for revenue growth. So speaking of revenue growth here, if we head on over to BlackBerry's most recent earnings report here, and we can see that there's no real revenue growth year over year here. Actually, we're losing revenue. So as I've said in my previous videos, this is definitely the big risk with BlackBerry. However, BlackBerry was basically given free advertising for the past few months from the Reddit crowd here. More attention is being given to the business, probably much more than BlackBerry has seen in a few years. So I think if BlackBerry can continue making deals in high growth areas like cybersecurity or self-driving cars, and if they continue getting good press coverage, then I think that they will be able to sell more products and hopefully increase their revenue stream here. In addition to that, we can also see when we look at the adjusted gross margins, we can see that BlackBerry has a pretty nice margin business around the 70%. What that's telling me is that we do not really need to sell that many more products to have a large impact in cash flows coming into the business, because the high profit margins are saying that we are able to retain a lot of this revenues coming into the business here. But again, this is a risky play with the momentum gain. The chart does suggest that the momentum is weakening a little bit here with BlackBerry, but we could bounce up from this $14 support level upwards again if we get another surge of momentum. Again, the risk is that that surge of momentum does not come, and the amount of activity does seem to have decreased over the past week or so on the WallStreetBets forum. Again, with all momentum names, I'd be a little cautious. But with all that said, now let's talk about the next stock that I want to talk about this week, which is Unity Software stock. So here we are in Unity's stock charts here, and we can see that we are at a pretty interesting spot. Take a look from our lows here around the $77 level. Since then, we've been on an upward trend up over 20%, and that's pretty good. This uptrend is why I'm watching the stock this week. I want to see if we can continue this uptrend, surpassing this $100 resistance level made from the tops and bottoms of these candles over here. Again, an aspect of market psychology here, as we approach big, large, round numbers like 100, we often see either support on the way down or resistance on the way up. And in this case, this is resistance on the way up. The likely reason for this is because a lot of people like to put in orders to either buy or sell at round numbers like 100. But let's talk more about the uptrend here, and this is likely due to the fall in the yield of the 10-year bonds. Because some people use the 10-year bond rates as a barometer for inflation or a measure of inflation, the higher the rates, the higher the inflation. And because inflation is bad for growth names like Unity, this falling inflation metric is a good thing for high growth stocks like Unity. So I think right now around the $100 level would be the place where I would want to open a position in Unity if I wanted more exposure to high growth names. Or if we can get down into the mid to lower 90s here, then I would be even more happier to put some money to work in Unity. So again, as I've talked in a dedicated Unity video, Unity is really in a good spot to gain share in the video game market, especially the mobile game market. Unity has a couple of different products. The main product is a subscription-based one tailored to professional game developers to make games like Hearthstone or Rust or Call of Duty Mobile. These makers of these games and many others pay a subscription to unlock all of Unity software's abilities. But for cheap people like me, I use the free version where I code the mobile games that I'm developing. So that said, even if me or others are not paying Unity any money outright for the subscription, some developers put Unity ads on their games. Basically, these things are Google ads, but instead of Google being the matchmaker, it's Unity. That is another way that supports Unity's revenue streams, which we can talk about here in Unity's most recent earnings report. And we can see that the revenues here are actually growing quite nicely year over year. However, take a look at this explosion in total operating expenses year over year as well as the net loss. This is about a 5 times increase from the total loss from operations, and that's normally not what I like to see at all in companies that I'm looking to invest in. However, if we look at the detailed view of the operating expenses here, which is this block on the earnings report, we can see that a majority of the new spending this year is in research and development. We can see that we are nearly doubling the research and development spending year over year. We are also doubling the general administrative spending year over year, but the magnitude of that spending is much more for the research and development. And because we are spending much more on research and development, that is definitely what I like to see in companies that I would like to invest in. This allows me, in my opinion, to justify the explosion in total operating expenses year over year, as well as the net loss year over year. I've said this before in previous videos, if you are a technology company, which Unity is, you need to invest in your product to stay ahead in technology, because this field grows so fast. If you're not innovating, if you're not moving ahead of the competition, then you're really falling behind. And what this investment in research and development is telling me is that Unity is really trying to continue moving ahead of the competition. And that's what I like to see in the companies that I want to invest in. So after all that said, after talking about Unity stock, now let's talk about the next stock that I want to talk about this week, which is United States Steel Company. The last company I want to talk about today is United States Steel, ticker symbol X. For those of you who are unfamiliar, United States Steel is a company that produces steel in the United States and has been around since 1901. The reason why I'm watching the steel stock this week is because this is not just my inflation play, but it's also an infrastructure play. Basically, what's going on in the United States right now is that the current presidential administration wants to pass infrastructure bills in order to improve roads, trains, and bridges. Honestly, to me, this is years late, and we have some of the worst infrastructure in the world. But, better late than never, I guess. I will not get into the details of the bills here, but the main point is that if we increase infrastructure spending, well, you need steel to build stuff. So steel producers like United States Steel should do great if there is an infrastructure bill. And if we look here, United States Steel has done pretty great. We are in an incredibly nice uptrend here. We can see that we're making higher highs as well as higher lows. If I was to guess, we'll probably get a pullback once this burst of momentum is over. And that will be the pullback where I would be looking to add to my position. But I do want to point out something here. To me, this is not a long-term investment. If we scroll out here to the long-term view of United States Steel, we can see that the momentum in steel stocks like United States Steel really only lasts a couple of years. This is a yearly chart, and we can see that this is a deeply cyclical company. we can see that each cycle really lasts only about a year or so. And this is likely coincided with excitement for infrastructure planning. So once this infrastructure excitement dies, then the stock also takes a little dip. So once this current wave of excitement dies, I will be looking for the door as well. Again, this is a long-term trade, not really a long-term investment. But that said, I do definitely think that we still have room to run for the time being. So with all that said, now let's head on over to the earnings report where we can talk about how the United States is doing as a business, and we can see that United States Steel is growing sales here quite nicely year over year. However, what's more impressive to me is if we look at the total operating expenses here, we're not really growing total operating expenses that much year over year at all. So what that's telling me is that if we're growing our sales here nicely year over year, but we're not really growing our expenses, that should carry down into the net loss and net earnings here. And if we look at the net earnings and net loss here, we can see that is absolutely true. We're coming from an almost $400 million loss here last year to a $91 million profit this year, and that is what I like to see. However, if we look at the earnings per share here for the quarter, we are making about 36 cents. Now let's annualize that out by multiplying by 4 because of the 4 quarters, and we get a round number, and let's just round that number to about $1.50 here. So with about $1.50 per share for the year, and our stock price is currently, let's say, $30, so we're coming in here after doing the math at around a 20 PE. So is United States Steel expensive? Maybe, but that depends on your definition. And again, this is extrapolating or guessing from using only 1 quarter of data here. So to me, even though United States Steel has had a pretty nice run off the lows from like $7, which may cause some valuation concerns, I think the macroeconomic story of infrastructure outweighs the risks here, which is why I'm continuing to look for opportunities to add to my position.